believe some mutual funds have given returns as high as 60 to 70% in just 1 year? And you can grab those returns too. If you're not earning yet, no problem at all. You can start investing a little from your pocket money and build your wealth even while managing your college hustle. In this video, I will walk you through the top mutual fund picks for students and youngsters from over 1,500 options. So let's start with the basics. Mutual funds are like a big pot where lots of people throw in their money. This money is then managed by professionals who invest it in various assets like stocks and bonds. What is the goal? To grow your money over time without you having to pick each investment yourself. So when you think about investing, what's the first thing that comes to your mind? Returns, right? Well, up on the screen, you will see the names of mutual funds that have really performed and delivered some impressive returns. Now, do you know what all these funds have in common? They are all equity mutual funds. There are a lot of choices, but let's focus on the big two, equity and debt. Historically, equity funds have delivered returns of over 30%. Debt funds, on the other hand, usually max out around 7 to 9%, which is pretty similar to a fixed deposit. When you are weighing your options between equity and debt mutual funds, equity funds are really worth a closer look, especially for students like you. Why? Because equity mutual funds focus on stocks and aim for capital appreciation over time. Yes, they come with some risk and can be a bit volatile, but they also have the potential to deliver much higher returns, unlike debt funds, which invests in fixed income securities like bonds. Now, key tip from my side is, if you're thinking about diversifying by throwing a bit of money into every kind of fund, think again. As a student, your investment amount is probably on the smaller side, so over-diversification, spreading your cash too thin won't really boost your returns. So keep that in mind. But is equity the only factor to consider? Can you just go on an AMC website and throw your money into any mutual fund? No. It's not that simple. You need to understand which types of mutual funds can truly give you the best bang for your buck. Large cap, middle cap, or small cap. Each one has its own risk and return profile, so pick the right one. But which is the right one? Check out what's on the screen. You will notice the top large cap funds are returning around 20 to 23%. But here's where it gets exciting. The leading small cap funds are really crushing it with returns between 39% and 48%. The numbers are quite eye-opening, isn't it? Top small cap funds often deliver returns that are nearly twice as high as large cap funds, and that's something to take note of. Of course, they can be highly risky, but that's where the potential for big reward lies. As a student, you have the luxury of time on your side, your risk appetite is higher, and starting with small cap funds could really pay off down the road. But what about the cost? Are you worried about how much you will have to invest? I completely understand that as a student, your budget might be tight, लेकिन वो एक बहाना नहीं होना चाहिए invest ना करने का. Come on, don't you order pizza or a burger? They usually cost around rupees 300 to rupees 500, right? Well, what if I tell you that you can actually start investing in a mutual fund for even less than that? Yes, I'm not joking. You don't need to have thousands of rupees to start a SIP. You will be happy to hear that you can kick things off even with just rupees 100 or rupees 500. There are loads of options like that on your screen. So problem for initial cost has been solved, right? Now here's the second point. When you're diving into a mutual fund screener, always look for funds that say direct plan. Because when you choose a direct plan, you are investing straight with the mutual fund company. There's no middleman, which means lower fees. Regular plans have a middleman like a broker who's going to take a bite out of your profits. When you choose a direct plan, you are investing straight with the mutual fund company. There's no middleman, which means lower fees. Regular plans, on the other hand, have a middleman like a broker who's going to take a bite out of your profits. If you are up for doing a bit of research and feel comfortable picking your own funds, going the direct route can really help you maximize your returns. So, we started with thousands of mutual funds, wading through all that clutter. After narrowing it down, we have arrived at the top mutual fund schemes that fit our criteria. And here they are. Check them out on your screen. Relax. These returns look great on paper, but remember, investing is not just about the numbers. It's all about doing your homework. Make sure to analyze and research market trends before diving in. Just because a fund performed well in the past doesn't mean it will continue to do so. So avoid the temptation. I have guided you through the various types and criteria to help you make informed choices. Before you take the plunge with your first investment, take a moment to review these insights. Your journey into investing can be safe and rewarding with the right knowledge. And if you have any queries, any questions, you can write to us and you will get all your answers right here on Republic Money.